Chris Vermeulen from the Technical Traders.com shares a seat with us today as we go over what's going on in the precious metal space, U.S. Treasuries, and the U.S. dollar. These topics and more on this week's edition of Metal Money. I'm your host, Patrick Vieira. Chris Vermeulen, welcome back to Metal Money. How are you doing?
I'm great. How are you?
I'm doing great. Thank you for making time to join us here.
Yeah, Happy New Year. Yeah.
Happy New Year as well. Chris, first question. We missed our end of year 2020 silver target of $30 plus silver, and I want to keep you in 2020 and ask, where in 2020 did silver find resistance, stopping it from getting to that $30 level as gold hit new all-time highs last year?
Yeah, so silver had a really good run last year. I mean, when you look at how the metals moved, gold broke out of its bull market in 2019, had a very strong run. Silver broke out last year and had a really nice run up to that resistance level of $30 an ounce. And I mean, from there, we kind of got hit with the COVID news, which kind of put a cap in the price, and we saw the market really start to consolidate. Overall, silver really had a strong move that was it was strong enough for that breakout. And now we're in this kind of first pause and pullback in the charts. And it's lasted most of last year, or the last 6 months, more or less. And so silver looks really strong here. But more or less, I think we need to see probably more fiscal stimulus, more uncertainty into the future here for silver to start its next run. But it is showing signs of leadership. I like silver a lot. I like it more than gold. But it really is just the precious metals sector, in the fear in the market at that level just kind of ran out of steam. And so it's just everything's just taking a pause right now.
Okay, shifting over to 2021, what are your silver charts or technical analysis showing you for silver in 2021, even gold as well?
I could pull up my charts and show you really quickly what silver
Sure.
is looking like. So this is a monthly chart of silver. You should see it up there. And I'm just going to zoom in to see last year's price action. And using really basic Fibonacci extensions, a technical analysis, there's a few different levels we can draw these. But if we were to go from these lows up to these highs and down to these lows, we can get an idea of this momentum, this big rally we saw early last year, followed by its pullback. And it's going to tell us where we should expect the upside move in silver going forward. So if we were to squish this down, the next upside target for silver is 31.30. That orange line here, that's a 618 retracement or extension, actually. That's where we should see when silver has a run, it should hit that level. Now, if it hits that level and consolidates, trades sideways for a couple months, then we should go all the way up to that $37 per ounce upside target. Now, this is a nice kind of big pattern. We had the breakout last year. It's flagging and having its first pullback, and the first pause and pullback within a new bull market, because silver has been in this big basing formation for several years. So you can see the clean break last year, big rally all the way up to 30, and then it's pulled back. So this is a really strong chart pattern pointing to a lot higher prices. Now, it's also a big pattern, meaning it could consolidate sideways here for 6, 8, 12 months. Who knows how long this is going to kind of play out in this sideways move. But at this point, when it does start to break, it's going to go to 31.30 very quickly, and most likely 37 and beyond. So very kind of bullish picture. But again, monthly chart, this is looking forward probably 6, 8, 12 months from now, maybe even further. Now, if we take a quick look over at gold, gold broke out a year earlier in 2019, had a beautiful run. More or less, if you were to just look at what gold did back here, we have the multi-year base, and then it broke out and it had its first pause and pullback. This is what silver's doing right now. And when it breaks and resolves to the upside, that's when you get the really big significant run to the upside. So silver is equivalent to trading somewhere in this range down here, the first pause after a breakout. Gold has got a very strong pattern. If we use some technicals and use conservative levels, we're looking somewhere at an upside target for gold this year of 2,230. So not quite the new highs, But then the next level is going to be around this $21 or $2,200 level to the upside. That's a very conservative approach. Now, if we were to use actual full measured moves, going to extremes, we're going to be looking at a lot higher prices for gold if things come into play. We're looking at $2,400 if we see the precious metals really take off. So chart patterns are really good. These are big patterns though, so people looking short term might not see these prices play out for potentially a year or longer. These are multi-year patterns, right? So exciting price action, great for investors, great for buy and hold of bullion, obviously. But in terms of shorter term traders, we could be in this range. Gold could be out of favor and silver for several months.
Okay, it's a great analysis, Chris. We appreciate that. Again, 2021, silver and gold were all moving up while generally the USD was down as it broke below 90 on the DXY. Now a reversal of sorts is taking place where we're seeing the USD making a move above 90, and we even see the 10-year yield above 1%. Was the upward movement of the dollar and the 10-year moving above 1% sort of a catalyst for the sell-off that we're seeing in gold and silver, or do you see something else in your charts?
Right. So the dollar has been oversold for a little while here. It's actually, if you were to look at the monthly chart or the weekly chart of the US dollar index, it's coming down and testing a very, very critical support level, or it actually was about 3 or 4 trading sessions ago. Since then, we've seen a very strong bounce. It's put a lot of downward pressure on metals, especially last Friday. We saw the metals get hit extremely hard. And that's because the dollar came all the way down and hit support. And this is going back like 10 years. This is a really critical support level. And so we're getting a technical bounce off this. I think the dollar could bounce all the way up to 90, potentially 95, the Dixie index. And that's going to keep pressure on metals for a while, which means we're going to see those monthly charts of gold and silver continue to trade kind of sideways, potentially lower for several months as this unfolds. But I think the trend for the dollar is still down. And when it breaks the low that it broke or that it put in a couple of days ago, that I think is when metals are going to go skyrocket and take off. So some pretty exciting times down the road, but the dollar is going to probably continue to bounce from a technical standpoint until it hits resistance. And then the trend is going to continue going lower for the dollar. When you look at bonds, bonds have been out of favor for really since the crash. They've just been pulling back and trending lower. And that's a sign that investors aren't really nervous anymore. They usually move to bonds when there's a lot of fear. I mean, we saw the price of the 20-year bonds. We saw them rally like over 30% during that market crash in April, which is a huge move for bonds. We haven't seen really any fear. Bonds continue to move to multi-month lows or falling out of favor. And bonds are usually a good indication of what investors want to do with their money. So if they're dumping bonds, that means they're not fearful. And that's also a reason why metals are a little out of favor. These defensive plays, bonds, gold, utilities have been moving lower. So it's just the bond price to me, I follow it as sentiment. What are the massive investors thinking and feeling? Because the general investor, when they get nervous, they call their broker or their advisors actually and say, put me more in bonds. I'm scared the market's going to crash. But we're not seeing that. So there's definitely not a big wave of uncertainty in the average investor pushing bonds higher or pushing metals higher right now, which is fine. That's what creates a bottom in metals and bonds. I think eventually we'll see fear come back and we're going to see them rally, but I think they're out of favor here for a few months.
Okay, moving over to two other points of interest, gold and Bitcoin. Risk reward short term, with Bitcoin making all-time highs seemingly every day, except for today, and precious metals somewhat stalling. Which one of the two, or even both, technically, from a technical standpoint, has your attention short term?
I think Bitcoin's got everyone's attention. I mean, it went from what, $12,000 2.5 months ago to $43,000. Bitcoin to me is a full-on roller coaster ride. It's a rocket ship. It's gone parabolic. Actually, if I showed you the chart, it gives you a good idea of what is actually going on with Bitcoin and how I see it from a technical standpoint. let's go to the daily chart real quick here. So if we go way back here to Bitcoin futures, daily chart. Now, the recent rally has dwarfed this previous run to 20,000. When we saw this run up before there was Bitcoin futures, we saw it go parabolic and ran all the way up and hit that level and then came pretty much straight back down. We saw a very similar type of move over here where it started to create this gap in the chart. It's hard to see, but there's a hole in the chart there where price just gaps higher. And eventually we saw another gap. We saw another big gap here, a huge gap here, and then another one up here. And these are called exhaustion gaps. When something starts going straight up and is going by leaps and bounds, like gapping, like it's just leaping, right? That's a sign that we're getting complete exhaustion. We saw that over here when it was headed up to 20,000 the first time. And when we look at the price action right now, you can see here it's rallied up and then we've got this huge gap in the chart. We had another gap in the chart. And so it is going parabolic by these leaps and bounds. And so it is a volatile roller coaster. You do not want to get in front of this by shorting it, but you've got to know it's going to be dropping 10, 20% on a daily basis as it's doing this kind of parabolic rally. So it's exciting, but right now it is a total crapshoot if you jump into Bitcoin, in my opinion, from a technical standpoint. One day you could be up 15%, the next day you could be down. You don't know. To me, it's a very bad bet for a trader to just be jumping in here unless you're a really good day trader following the intraday charts. So Bitcoin's got my attention for sure. Am I trading it? No, because it's a high risk. I don't need to gamble my money just to say I'm in Bitcoin. I own some long-term, but that's it. I bought them years ago. Gold is kind of big, boring, and slow, but I mean, I own a lot of it and I like it. The fundamentals are there, the technicals are there, and that's why I like that from that standpoint.
Okay, Chris Vermeulen, we thank you for your time, and we hope we can get you on again real soon because things look to be quickly changing all year long.
Great. Well, thanks for having me on the show. Really appreciate it. And we'll see how the charts move over the next few weeks.
Yes, we will. Thanks again, Chris. There you go. The USD and Treasuries making a play, but will that trend stay or go away? As always, please leave your thoughts in the comment section below. Thanks for watching, and I'll see you on the next episode of Metal Money.